Jenny, hello. Hello and welcome back to Abu Dhabi.
It's great to be here.
Of course, you're not new to Abu Dhabi. Franklin Templeton has been in the region for 25 years. So tell me, how has your business evolved in the region in the last 25 years?
So it actually all started in Abu Dhabi 25 years ago. And our business has evolved a lot over that period of time. When we started out, we were much more focused on kind of the wealth channel, building relationships with local banks and providing various products for that channel. Now we've evolved to having relationships with institutional clients. We've opened more offices in the GCC and really kind of have grown with the region.
You certainly have, but tell me what gives you this idea? Why do you think the region, of all the regions that you could be investing in, hundreds of them at the moment, you choose to invest so heavily or to bet so heavily on this region?
Well, Franklin Templeton's a global company, so we have clients in over 150 countries, which means, our job is to find investment opportunities anywhere in the globe. And so we actually have to have a presence in a lot of places just to make sure that we're finding those investment opportunities. What I think is so interesting about the region, particularly now where you have a bit of a divergence between, say, the US and China, is actually the Middle East is a great bridge on those relationships. And so anytime that happens, you actually can find some investment opportunities. Plus, I think there's we have about $6 billion invested in the region. And, I always say that what's so interesting here is there's a real deliberate effort to diversify the economy, which means you need money to invest in that diversification. And so that brings up investment opportunities. So as we're scouring the globe for places to invest, this is an area that's very vibrant.
What does the world not understand yet about this region, or what does the world still get wrong about investing in this region, do you think?
So I think the world thinks of this region as it's oil, right?
Yes.
And what they don't appreciate is that, depending, like you look at Saudi Arabia, almost 50% of the economy now is non-oil based. The Vision 2030 is all about diversifying the economy. And I think actually in the region, you have the Vision 2035, Vision 2040s, and in all cases, there is a very focused, deliberate effort about figuring out how to diversify the economy. I describe it, so I'm third generation at Franklin Templeton, and I always say that there's an advantage to being a public company with a family history and the family still involved, because it enables me to think longer term. I think some of the investments we've made in things like blockchain and AI don't pay off quickly, but have to be done, and it's that kind of family mentality. And what I say when you ask the question about what do people get wrong, I often describe dealing with the GCC region, I would say you have to think of it like a family. That you get this sense by the leaders who feel a responsibility. Oil runs out, say, in 3 generations. What are we investing in today to ensure that future generations have opportunities? And taking those revenues and figuring out how to diversify the economy, that's that family mentality. That's that fiduciary responsibility that you feel, often how I feel about running the company. How am I thinking about leaving it for the next generation? So I think a lot of people get that wrong. They don't understand kind of that nature. I think there's always assumptions around, how are women treated in some economies? And I think that often people get it wrong.
With this also comes risks. Of course, you must be thinking about the risks. So what risks are you implicitly taking on when you're betting so heavily on the region?
Look, I think that we invest globally. So we have some clients, often clients want to invest locally first. So if you're living in the region, people tend to want to allocate the majority of their savings within the region. So we create local products, but also, we have global equity products, we have emerging market products, and so we compare these investment opportunities versus others. Number one, as I always tell people, diversify, right? So this is going to be an area of diversification. But two, what are the risks? I guess the risks are, and they get less and less so, because in the past, if you were investing in the economy, oil was such a big part of that. as they diversify those economies, you're less tied to oil. And so therefore the individual country's economy is less tied to oil. Tourism has become much more important, which is pretty interesting, and you see the growth in tourism here. I think people get that wrong. Healthcare is interesting, technology is interesting. There's a real focus on those investments. And so to me, those are great opportunities, but you have to compare them versus other opportunities in that same sector.
Yeah. And to that, you actually did recently register 8 actively managed funds in the the Kingdom of Saudi Arabia.
Yep.
You signed MOUs with the PIF and with Hasana. So what does Franklin Templeton bring to the partnership with these entities?
Yeah, so today, Franklin Templeton is a $1.7 trillion asset manager. We have about $270 billion in private market assets, of which about $90 billion is private credit. We launched the first ever Sharia private credit fund. I think what we bring, and we've been investing in the region for decades, so we were already doing that, but now having this private markets capability, we can go in as new projects, infrastructure projects and other things are being launched and actually provide the private market in lending capabilities, not just the traditional, say, GCC bond and fixed income. I also think we have tremendous experience in growing economies. And so we're able to bring and kind of look across the globe and say, here's what's working. You want to develop capital markets. Let us, we'll provide some feedback on how you can strengthen and deepen your capital markets, which is really, I think, important, a lot of conversation in the region. And so our ability to bring foreign investment in to help fund new projects is important. And we saw in the case of the KSA, where there is so much passion and strength around the Vision 2030, that just opens up great investment opportunities. I always say to people, here's another thing that I think people get wrong. People just think, you go to the Middle East because you're going to get them to invest their oil money in your products.
Yep.
The reality is, what you get wrong is there's great investment opportunities here too. And but we always feel like you have to be feet on the ground to find those opportunities.
Tell me a little bit more about the opportunities that you see here in the GCC.
So, I think some of the work that's being done in technology is interesting. We're going to be announcing a partnership in the area of blockchain. I think that, so that's one area. There's a lot of interesting things going on in AI here. I know that some of the healthcare development, I've talked to US companies that are looking to set up operations here. You have some major hospitals that are already here in the region. So those are all interesting investment opportunities. We're also interesting, I think it's a surprise to a lot of people, is a big Sharia manager. We have about $5 billion in Sharia and Islamic finance. We were the first to launch a European UCITS product that is Sharia compliant. We have a technology fund that's Sharia compliant. So, our job, I always say, is to provide a broad breadth of investment opportunities that span the risk spectrum so that it aligns with whatever our client's risk profile is, and deliver them in whatever vehicle our clients would like to receive it. And so, we are here looking at ETFs, traditional UCITS and mutual funds, separately managed accounts, alternative asset classes, and trying to package those, and then obviously invest them locally as well as globally.
As you rightly said, Saudi Arabia is trying to deepen its markets, as are the other countries in this region. But specifically on Saudi Arabia, what do you think? Do you think there are any reforms needed in order to accelerate institutional participation in those markets?
Yeah, there's a couple. I mean, and I know that they're working on it in the case of their bond portfolios. They need to broaden the depth of their bond market. Right now, it tends to be local banks that are buying it. They're really tight credit spreads. So if you want to move the credits away from the banks, you have to be at a market price. So I think that's really important because banks are the great multiplier of money in any economy. And so you want banks to be able to turn over their balance sheets and be able to turn over their lending capabilities. And so as the banks are buying, say, the government issued debt, you want them to be able to sell it off in the market. Well, it needs to be at market price. So that's, one area that is important. I know you've seen actually a lot of IPOs. This is pretty new, and which is exciting, right? So those are really important, and that's where also our job as somebody who has clients all over the world, it is to promote those opportunities of the IPO and make the investments in those IPOs so that you show depth in the market.
So on IPOs, Saudi Arabia probably had the most number of IPOs in 2024, if I remember correctly, something over 40.
I think it was 24 billion or something.
Yes, something over 40 different issues. What does that mean as regards private credit? Are the markets ready to scale, the markets in the region, are they ready to scale private credit? And how does that go when we look at the increase in the number of IPOs? Do the two match?
Yeah, so, interestingly, my comment, let's take Saudi Arabia, if your bank's balance sheets are filled with a lot of government debt, it's hard. They need to be able to clear that debt to be able to have the capacity to do the lending on new businesses, right? So that middle market businesses or the entrepreneurs that are trying to start businesses, they often need to be able to borrow money for that. Private credit's a great way to do that. Venture capital is a great way to do that. And so, I think that what you see with these companies going IPO is that actually they've already gotten their private credit, and now they've come to the market and they're mature enough that they can attract capital that's willing to invest in the public market equities. So that's really exciting. You want more private equity and private credit to be able to fund really things like the Vision 2030, because you need to be able to have that capital for the startups to be able to grow so that they ultimately can go public. But to go public, you want a company to be pretty self-sustaining by that point. In other words, those kind of early years where you're working through the kinks, you need to have that in the private markets. It's better to be private because your earnings are going to tend to be volatile.
You want to stay in the private markets